Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. Last Friday, I was at my baby's kindergarten. That morning, the parents get to do activities with their kids. Now, one of these involved putting small items like cotton balls, sweets, etc. into a bottle. My baby was always beating everyone in the queue in order to grab those items that he liked. So while as parents, we're supposed to tell the kids to let the others go first, and it is okay not to be the first mover, this may not be the best piece of advice in finance at times. Let's link this up with the charts for the major equity indices, such as S&P 500 and Hang Seng Index. Now, many of these have been in a strong downtrend for the last 2 months. In fact, almost textbook examples of what a downtrend should look like, i.e., well-defined lower highs and lower lows. Those who have been powering exposure to equities since the middle of August would have done very well. But what about those who have been holding on to equities? Should they be offloading now? Well, if you look at technical indicators, there is emergent divergence between index charts and some key indicators, such as Relative Strength Index and MAC. So what do I mean by divergence? Well, if you look at both S&P 500 and Hang Seng Index charts, you can see that while the indices have been making new lows over the horizon of the last 2 months, the RSI has not been. Now, the RSI really measures the strength of the index. So that means that the sell-off may be losing in strength. So now, are we prone to get any sort of short covering? Well, we need to look at the data points. In terms of Fed governor speeches, over the weekend, we've been getting some mixed signals. Some governors continue to talk about tightening, but others are noting the effect that this tightening has on the economy. This Friday, the critical piece of data is the non-farm payroll. If we do get any weakness on wages and the unemployment figures, this may lead to speculation that the Fed may dial back on its pace of rate hikes. And of course, we will get more clues from US CPI figure on Tuesday, 13th of October. To conclude, for those of you who would like to trim your exposure from equities further, you may be able to get better levels to do so. For example, S&P may be able to rebound to next levels at 3,900, or the Hang Seng Index at 18,200. That's all from me today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.